Good morning to all of my viewers. Today, a slight bit of a winter type of weather. I'm feeling a bit cold. Anyhow, welcome back to GBS YouTube channel series and the continuation of technical discussion. And again, today, taken the mock exam paper 2 of financial accounting, and in the previous video I have done 3 questions or 4 questions, and today let's continue with that. The first question is, today W company, a sales tax registered trader, bought a new printing machine. The cost of the machine was 80,000 excluding sales tax. In this situation, the word excluding is important. When regardless of whether it's a sales tax registered or not, when they say excluding, sales tax anyway not included in that 80,000. So we don't need to worry about it. And then the delivery cost was 2,000 and installation cost was 5,000. So these two are, now here the question actually, what should be the cost of the machine in the company's statement of financial position. So we need to find out what are the elements which we need to capitalize. So obviously the purchase cost we need to, the delivery cost, if you, how you define, how you find out. With any point of time, if you avoid any of the cost, can you bring your asset to its intended location and workable condition? This is what the question you need to ask. So if you don't pay the delivery cost, you cannot bring the asset to its intended location, and if you don't pay the installation cost, you will not be able to have the assets at workable condition. So 2,000 you will take it, 5,000 you will take it. However, before using the machine to print customer orders, a test was undertaken and the paper and the ink cost 1,000. This test has nothing to do with the cost of asset. So therefore, your total answer is 87,000. That's the answer for the question number 5. And the question number 6. Which of the following correctly defines equity according to IASB's conceptual framework? If I to give you an equation, you see asset is equal to equity plus liability. And then if I bring the liability to other side, asset minus liability is equal to equity. So according to mathematical equation, equity is asset minus liability. In other words, the equity is after deducting all the liabilities, what is left over in the business for the owners are equity. Let's read a sentence which suits to this particular meaning. Equity is a present obligation of an entity arising from past events. This leads to liability. So this is not equity. Equity is a resource controlled by an entity as a result of past event, and from which, this is actually defining asset. Third one, equity is the residual interest in the assets of the entity after deducting all its liability. This is exactly what the answer is. Fourth one, equity is increases in economy value, that's profit. So correct answer is third option. Which of the following is a qualitative characteristics of financial state information included in the IASB's conceptual framework? There are certain qualitative characteristics which we have discussed, and fundamental qualitative characteristics, and also enhanced qualitative characteristics. So here we have 4 answers: relevance, materiality, consistency, and accruals. The last 3 items are concepts. They are not conceptual framework, qualitative characteristics. So the only answer is relevance. So let's look into this question now. S&P company sells 3 products A, B, and C. The following information was available at the year end. Original cost 10, 9, and 20. Estimated selling price 9, 12, and 26. Selling and distribution cost 1, 4, and 5. units of inventory 500, 1000, 250, 850. In accordance with IAS 2, inventories, what is the value of inventory at the year end? Now here, what is important is that when valuing inventory, you should either value as per cost or as per NRV, whichever is lower. So we have three items: basic, super and luxury. Basic, super, luxury, and the cost they have given already 10, 9 and 20. 10, 9 and 20. And to find out NRV, they have given estimated selling price 9, 12, also 26. Then how to calculate NRV is future selling price minus future completion cost and any future selling expenses. So here we have this selling and distribution cost given to us 1, 4 and 5. So we take that 1, 4 and 5. So if you subtract this, we get here 8, and if you subtract this, we also get 8 here, and if you subtract this, you get 21. We reconfirm. Yeah. So what are the lower item? Is the cost or NRV? We need to find it out. The first one, this is NRV actually. First one, this is lower. Super, this is lower. Luxury, cost is lower. So 8 into this one, also 8 into, and this one 20 into 500, 1250 and 850. 500, 250, I think 850. Third one is, yes. Now let's open the calculator. $500 into 8, you get 4,000. You get 10,000, and then 20 into 850, $17,000. 31,000 is the answer. Yeah, your answer is 31,000. Thank you so much for watching this short video, and I will continue doing the remaining questions in another forthcoming session. And till then, nice meeting you all. Keep tuning, do subscribe, do share, and don't forget to press the bell button. Thank you so much. Have a nice day.